Hello, welcome to the online classes for economics. I am Rajat Sharma, and today we are going to study a class 12th topic of national income and its aggregates. National income is considered the most important topic, and it has a very big weightage of 10 marks in your board examination, in CBSE board examination. So let's understand the topics that we have to cover in this particular chapter. Topics to cover. We will talk about the definition of national income, the various elements. We study the final goods versus intermediate goods, the producer versus consumer, the transfer payments versus factor payments, the stock versus flow, real GDP versus nominal GDP, the circular flow of income, GDP and wealth, normal resident status, and your favorite topic, numericals. Numericals, the various terminologies and certain precautions that we need to keep in mind while calculating the national income. So these are the topics that you cover. If you know all these topics, I guarantee you can score easily 10 out of 10 in this particular chapter. Okay, so we are starting with this topic, with this chapter, national income and its aggregates. Shri Ganesh करते हैं next. Okay, national income. The national income is a sum of money value of all final goods and services produced in a country during an accounting year. Accounting year is also known as financial year, economic year, fiscal year. We are talking about the sum of money value, the total of money value. Now we are adding money value because we can't add the commodity as such. We can't add the quantity of rice, eggs, wheat, those things. We can't add furniture, operations conducted by the doctors, teaching hours, right? We can't add everything. They are not quantifiable. Some things are not quantifiable. Even if something is quantifiable, they are not addable. So we use the money value and add the money value of goods and services, the final goods and services which are produced in a country during an accounting year. Now understand what is final goods. Let me take an example of a mobile phone. A mobile phone, let's say this mobile phone cost rupees 5,000. It has certain elements in this. It has a display, speaker, flash, camera, processing chips, multiple elements. So when I'm adding the value of goods, I will take 50,000. I will not take 50,000 plus 10,000 display plus 8,000 speaker plus 5,000 battery. I will not add those things again. If I add those things again, they will lead to double counting. Now double counting is an error. It is the error of taking the same item more than once in this estimation of national income. So let's quickly read out the difference between this final good and intermediate good. Final goods are the goods which directly satisfies the wants of a consumer or a producer or the government. It directly satisfies the wants. Whereas intermediate goods are used for further production. So what crosses the production boundary? The final good crosses the production boundary. They are crossing from the producer to the consumer. And what remains within the production boundary is the intermediate goods. They remain between two producers. So we have to include only the final good in the estimation of national income, not the intermediate good. Okay? Let's take it. Okay. So now there is no perfect example that this product is a final good or this product is an intermediate good. The same good can be a final good also. The same good can be an intermediate good as well. Let me give an example. It only depends on the last use, how you're using it at the last or at the end. Let's take sugarcane. If I'm purchasing sugarcane for consumption, it is a final good for me. But if you are purchasing sugarcane to further produce it into sugar or jaggery, you're using it. So that sugarcane becomes a raw material for you. You're using it for something else. That becomes an intermediate good. The same product can be a final good. The same product can be an intermediate good, depending on the end use. If I use bread for consumption, if I purchase bread for consumption, bread becomes a final good. If we purchase bread and make bread pakoda out of it, and I sell bread pakoda, so now the bread becomes an intermediate good. If I'm further processing it, it is an intermediate good. I hope it is clear. You can put it in the comment section, the example of final goods and intermediate goods depending on the end use. Let's see if you have got it right or not. I'm waiting. Do it now. Do it. You can pause the video if you want. Let me see the time. Okay. We'll try to keep it for 10 minutes. Alright. Now, talking about consumer goods and producer goods. Now, consumer goods are the goods, of course, used for consumption purposes, and producer goods are the goods, of course, used for production purposes. The consumer goods are of three types: non-durable consumer goods, semi-durable consumer goods, and durable consumer goods. Non-durable, semi-durable, and durable. So non-durable consumer goods are of course used in a single act of consumption. I eat a packet of chips, it's done. I open chocolates, eat, it's done. I go to the salon, get a haircut, service is done. Go to the movie theater, watch the movie, service is done. So all the services, all the edible items, they all are non-durable consumer goods. Let's talk about semi-durable. Semi-durable consumer goods have a life expectancy of somewhere around 1.5 years, 1 year, 2 years, something like that. For example, shoes, clothes, glasses, these things. Something that needs to be replenished every few years. They are semi-durable. And the durable, which you purchase once and you use it for many years, like computer, like let's say fan, let's say AC, let's say refrigerator, right? Washing machine. Those things you use for many years, a consumer use for many years, they are durable consumer goods. Alright. So all the consumer goods that we're talking about, be it non-durable, semi-durable or durable, they all are final goods. Whereas talking about producer goods, there are of two types. One is non-durable, one is durable. The non-durable producer goods are used in a single act of production. For instance, if we talk about, let's say, raw material, fuel, electricity, right? These things are used for production, and once they're used, they're done. We took an example of sugarcane. If the sugar industrialist is using sugarcane becomes an intermediate good. Becomes an intermediate good. If I use bread to make bread pakoras, so bread becomes an intermediate good, right? So these are goods which are used for something else. The producer uses them for something else. These are intermediate goods or non-durable producer goods. The other one is durable producer goods, like something that a producer purchases which helps the producer in the process of production for many years. For example, plant and machinery. We also take an example of a car in case of taxi driver. A taxi driver purchasing a cab or a car. So he is purchasing the car and using the car for many years to produce taxi services, right? So these are also known as capital goods or final goods, the durable goods. So all the non-durable are intermediate and all the durable producer goods are final goods or capital goods. So here we can say that all the intermediate goods are of course producer, but all producer need not to be only intermediate. They can be final also and intermediate also. All consumers are final, but all final does not have to be only consumer. This is what it is given. Okay. Let's quickly understand this topic, factor versus transfer transactions. That's it. I went to the shop, I paid some money and got something in return. I went to the salon, paid money, got a service. They are two-sided transactions. Whatever is a two-sided transaction is a bilateral transaction, and the bilateral transaction will be under the factor transactions. The bilateral transactions, if I give something, I get something in return. That is a bilateral or two-sided transactions. These are earning concepts, and these are included in national income. They are included in the estimation of national income. Whereas if I'm receiving money as a pocket money from the parents, or I'm giving money to the poor as a charity or donation, or we are paying taxes to the government, one-sided unilateral transactions, nothing in return. These are all transfer transactions. If you receive scholarship from the government, again, you have not earned it. Maybe you would say you have earned it, but you're not doing anything in return to the government, right? So whatever you have not earned, they are all transfer transactions, and we do not include transfer transactions in the process of estimation of national income. Very quickly, I want to cover one small topic. This. You should know that there are four sectors of the economy. Sector is household, the consumers, the firm, the industries, the government, administrator, and the rest of the world, the abroad. Four sectors of economy are there: household, firm, government, and rest of the world. If you're talking about all the four sectors, we are talking about an open economy, the four sector economy. If you talk about three sectors, that is household, firm, and government, this is a closed economy. Even household and firm, two sector economy is a closed economy. Household is the people, the person, the consumers, we all people. The firm are the producers, the industrialists, the government administrator, and the rest of the world, the remaining world. There are four factors of production also: land, labor, capital, and entrepreneur. The factor inputs from which we do the production: land, labor, capital, and entrepreneur. Land earn rent, labor earn wages, salaries, capital earn interest, and entrepreneur earn profits. This is some basic concepts you might have heard, learnt, studied in class 11th as well, just to brush up. Now, circular flow of income between household and firm, between the two sector economy, household and firm. This is in your syllabus, very important question. Household and firm, circular flow of income. So initially, household sends and supplies the factor inputs such as land, labor, capital, entrepreneur, which are the real flow, to the firm, and in return the firm pay the money value, the payments for factor inputs, that is the rent, wages, salaries, interest, and profits, to the factor inputs, and they're paying the money back to the household. That is a money flow. So they give a real flow and they receive a money flow. After receiving the money, household purchase goods and services, which is of course a money flow from the firm, and the firm supplies the goods and services back to the household. This is again a real flow. So the circular flow of income is the flow of real flow and money flow, and that's how one's income is another's expense, and it's a relationship between real flow and money flow. So I hope today you enjoyed the class, learned something new. If you like it, please like the button if you find one, and share this video to your friends. I hope to see you soon. Alright, all the best. Bye for now.